Hey, welcome in. You're listening to the daily version of the Korelin Economics Report. This program is being produced exclusively for my friends at Kitco. Very, very interesting day in the markets today, and I am chatting right now with Roger Wiegand. We're going to get Trader Raj to weigh in on this thing. Big Al is very concerned. The Dow is down almost 500 points right now as we are recording. 469 specifically is the real-time quote. Gold, having been down earlier today, is making a rather, I think, significant comeback, and that does not surprise me a bit. The fact that the conventional markets are absolutely tanking right now, I find to be just nothing more than the market saying, Mr. Bernanke, your latest thing doesn't work, and the market saying, you folks over in Greece and Spain and Italy, we're very, very concerned about you all. Rod, I don't personally think, and you and I talked about this off the air earlier, we have a bit of a disagreement, which we normally don't. You think that you were correct in the fact that gold has come back today, but I got to tell you, I am very, very bearish on the Dow, much more so than I have been up to this point. Comment on both of those topics for me, will you?
Well, the Dow Jones now is on Bloomberg. We're showing it's down about 467 points. I think anything between 5 and probably 700 could be called a crash, but the trading day is not over yet. Keep in mind they've got some time to fiddle around and make some adjustments, and the S&P traders can turn things around rather quickly. The gold today opened at 1782. It went to a low of 1723. Down about $60 or so. The trading range was 65.80, and then it came back to 1740. It ended up pretty much on the futures session down 3.8%, not a big deal. I was watching it very closely because I didn't want to see gold go under 1707, and the low was 1723. So as far as I'm concerned, we're still on trend. Silver, $36.43 right now, down 10 whopping percentage points. It opened at 39.67, hit a high of 39.85, and then went all the way back to 36.13. We suspect that a lot of this fallout happened and occurred simply because two things happened. Bernanke's operation twisted, or whatever you want to call it, didn't work out, and consequently the markets got scared. And when they got scared, they started to sell. And when they started to sell, everybody was in a weak position generally in all the markets, primarily because we were at pivot points where new supports and resistance numbers were being found. And there's been generally a lot of bad news on stocks all week. Everybody's been standing around watching and waiting for Europe to step up and get something out there that they could hang their hat on, and that has not happened. At this particular point, I would say that what they're going to do, and it's merely a supposition on my part, I think that the Bernanke and company is going to panic after what they've seen yesterday and today, and I think they're going to come in with and make an announcement on QE3 and try to moderate it somewhat. But I think that if they, in fact, they do that, and particularly if they do it before the weekend, you'll see a big reversal and bounce back rally in the stock markets all over the world tomorrow, and specifically on Sunday night going into Monday in Asia.
Last comment, bullish on gold, long term?
Still bullish on gold. Nothing's really changed. We didn't violate trend. Same thing for silver. To violate trend on silver, you'd have to go all the way back to 33. We didn't even get close. And we were 20, 25 points above that on gold. And keep in mind that gold is the last bastion of value. Everybody knows that. A lot of the selling today was technical selling.
Okay, there you have it. We're going to be back with you tomorrow. Interesting times, don't you think?